India imported 304 million ounces of silver last year. That's 10 times more than the registered category on COMEX. We're seeing it on the Shanghai Metals Exchange and the Shanghai Futures Exchange. They had their biggest one-day delivery of silver ever last week or the week before. We're seeing backdooring out of the ETFs by the authorized participants, largely the commercial banks. So we are seeing silver disappear. We are seeing the price suppressed, again, talking about the counterintuitive nature of the price. At the same time, the biggest money in the world is accumulating it and removing any and all counterparty risk by pulling it off of the exchanges. And I think it's the value of a generation.
Popular precious metals analyst Andy Schectman has described silver as the trade of a generation and the most undervalued asset on the planet. During a recent interview with Commodity Culture's Jesse Day, the Miles Franklin president delves into interesting facts about the metals industry, specifically focusing on silver and its double role as both a monetary and a high-value industrial metal. Andy explains that it is no coincidence that despite low prices, central banks and other large institutional investors are currently accumulating silver at a record pace. Andy believes it is in fact as a result of their activities that silver prices are being kept so low. Silver prices rose sharply to end the week, going from a low of $22.50 on Thursday to $23.17 on Friday, a 2.97% increase in just a little over 24 hours. This is despite the DXY index trading at multi-month highs and expectations of at least another U.S. Federal Reserve rate hike before the end of the year. According to reports, the gain in silver prices was spurred by recent strong economic data from China, indicating that the world's second-largest economy is likely to recover in the third quarter of the year. Data shows that industrial production in China climbed 4.5% in August, higher than the 3.9% estimates. Retail sales also rose by 4.6%, against estimates of 3.0%, and unemployment rate dropped to 5.2%. With China, the world's largest metals consumer, expected to make a huge comeback, there is renewed hope for more metals demand, especially for industrial metals like silver. This is why Andy believes we are heading for an explosive era in silver prices, with rapidly decreasing supply and increasing demand. Andy also talks about the heavy manipulation of the gray metals price and depletion of Mexico's silver reserves in only a matter of years. We will now bring you clips from Andy's interview. Please watch the video to the end, subscribe to the channel, and turn on post notifications for more videos like this. Also, ensure you drop your comments and observations in the comments section below. It all helps with the YouTube algorithm so the video can get to more viewers. Thanks for your support and enjoy the video.
As far as tailwinds are concerned, you have what I believe to be the most undervalued asset on the planet, that being silver. We're going to see at least 200 million ounce shortfall between supply and demand. It is an asset that is needed in so many ways, or so many forms of manufacturing, in terms of green and digital applications, and copious amounts that are growing every day. There's 500 ounces in the tip of every Tomahawk cruise missile, or any of these sophisticated like Javelin missiles. They have huge amounts of silver. Google it, you'll see that. And when we've given away so much of our artillery and our weaponry to the Ukraine, the U.S. will need to rebuild its stash. They will need silver. And you know what's very unique about silver is this duality in demand between an asset that's experienced a monetary renaissance and all of the ever increasing industrial and military uses. And in a world that is going green and digital, the need for silver is massive. Now, when you put it in the context geologically, it becomes a lot more interesting. Geologically speaking, the price of silver in relation to gold for 5,000 years has been 16 to 1. There's been 16 ounces of silver in the ground for every 1 ounce of gold. I think the exact number, they call it God's ratio, was 15.5 to 1. So silver, in essence, is much more abundant geologically. But the big deposits were found decades ago, long before the advent of advanced imagery, because the geologic term for silver in terms of where it's found is epithermal, and meaning it's very near the surface. And so last year alone, only roughly 30 to 35%, call it a billion ounces, were mined. Roughly 300 to 350 million ounces came from companies that mine silver, period. The other 650 to 700 million ounces came from companies that don't mine silver at all. They mine other things and stumble across it. Oh, look, we found some silver. It's a byproduct of other elements that are being mined for, which means it's decreasing its footprint in nature. The big deposits which were found near the surface have already been exploited, and now you only get 3 out of 10 ounces that are mined from companies that are looking specifically for silver. So this is a depleting asset in an environment where the demand is increasing exponentially in green, in digital, in military, and in monetary applications. And so if we fast forward to roughly the Industrial Revolution, let's say 100, 150, 200 years ago, the average price, gold to silver, largely because of gold's role as money and the logistics of it, has averaged roughly 42 to 1 price. The geologic ratio has always been 16 to 1 until now. My good buddy Keith Newmeyer, who I believe you know, and he's told me personally on at least 3 or 4 occasions and publicly just a couple months ago at the Rule Symposium that what is coming out of the ground right now globally is 7 to 1. So it's depleting to the point where you're only getting 7 ounces of silver out of the ground for every 1 ounce of gold. It's been 16 to 1 for thousands of years. The price ratio, because of logistics and monetary applications, has been roughly 42 to 1 for almost 200 years, even though it was 16 to 1 geologic ratio, right? Now you get to a point where you have this massive expansion in demand and a depletion in geologic availability, stockpiles in the ground, and we get to a 7 to 1 ratio, yet it's priced at 80 to 1.
Many expert analysts have been and are still talking about silver reserves depletion. In 2020, a paper published in China noted that the Asian country has 41,000 tons of proven silver reserves in the ground, that at the current mining rate, the reserves would be fully depleted by 2032, leading to resource extinction. The report further noted that China ranks among the top 5 silver consumers globally, averaging an annual silver demand of 6,300 tons in the 10 years leading to 2020. It currently produces about 3,350 tons annually, meaning it already imports about half of its silver consumption. From 2033, China, the second largest silver producer after Mexico, would have to import all the silver it needs, which would worsen the global imbalance between silver supply and demand. The situation in Mexico, the current leading silver producer, is even more dire. 3 years ago, its silver resource reserves were estimated to be 37,000 tons. At the current mining pace, experts estimate it will be exhausted by 2026. Let's get back to Andy's interview as he sheds more light on the situation.
And it's priced at 80 to 1 because there are a couple of banks on the COMEX market that have the largest concentrated short position in any commodity traded on COMEX. So why the hell would they do that? Why such a concentrated short position? Massively concentrated short position. They are trying their darndest to keep it from rising in an environment where everyone is accumulating it. India imported 304 million ounces of silver last year. That's 10 times more than the registered category on COMEX holds. Those are the bars that are available for delivery. And if you talk to people like Ted Butler, probably the foremost expert on the COMEX market and its relationship to silver, he will tell you there is a growing, very, very large growing shortage of industrial-sized 1,000-ounce silver bars. But it's not just in COMEX that you're seeing these bars delivered off the exchange, copious amounts. We're seeing same thing happen in the London Metals Exchange. At the beginning of the year, they told us if the deliveries continued the way they did last year, there'd be no silver left. We're seeing it on the Shanghai Metals Exchange and the Shanghai Futures Exchange. They had their biggest one-day delivery of silver ever last week or the week before. We're seeing backdooring out of the ETFs by the authorized participants largely the commercial banks. So we are seeing silver disappear. We are seeing the price suppressed. Again, talking about the counterintuitive nature of the price. At the same time, the biggest money in the world is accumulating it and removing any and all counterparty risk by pulling it off of the exchanges. And I think it's the value of a generation. Honest to God, I believe it is the value, the play, the trade of a generation. And I don't say that flippantly. The United States Geological division of the government came out recently and said it will be the first item struck from the periodic table of elements. They said that within the next decade, all of the silver in Mexico will be depleted. You are seeing a depletion of silver, an increase in its uses, a suppression of the price. It is the trade of a generation. You look at everything since 1980, it's gone through the roof. Where's silver? Half of where it was in 1980. Does that seem right to you? Look at gold. It's just $100 basically off its all-time high. Silver's half of it. And yet it has more uses and needs industrially, militarily, and now monetarily than gold does. And it should be much higher. I think it's the play of a generation. What are the headwinds? The manipulation on COMEX, period. You have banks that are holding down the price for a reason. What the hell is the reason? It must be more important than we're being led to believe. But why put so much effort to the point where the guy that ran the metals desk and the head trader at JP Morgan were just sentenced to prison last week for suppressing the metals market, largely silver. And so when you talk about the importance of it, the price is being betrayed by the drawdown from the world's exchanges. And I guess I'll say it to you this way, Jesse. It would be far easier for you or Eric Sprott or Rick Rule, someone who could write out a check for $100 million, to give me a check for $100 million to buy silver than it would be to take delivery off the Shanghai Metals Exchange, off the COMEX, off the LBMA. You need to be massively sophisticated to do that. And so who's taking it? Where is it going? Why is it disappearing? It certainly is not indicative of its price, and I will go on record as saying I believe it to be the value proposition of a generation. Price be damned. The fundamentals are way, way, way distorted from the price, and I look at it as one hell of an opportunity.
Even if the Fed announces one more hike this year, there aren't many indications it's going to hike further in 2024. August jobs data was weaker than expected, which means the cracks Fed Chair Jerome Powell often refers to in his speeches and press conferences are finally beginning to show. Talks of a hard landing, which were previously shelved, are becoming even more popular than they were earlier in the year. Plus, there is a very high chance that the banking industry is heading for another grand collapse. All this points to massively bullish days for precious metals, especially metals like silver, which have been known to outperform during bull markets. Do you agree that silver is currently the world's most undervalued asset? Please share your thoughts in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.